Welcome to Management Accounting. My names are Charles Omanyo. I have taught management accounting over the last 10 years. The management accounting lesson that we are going to cover is relevant to professional accounting students pursuing either ACCA, CPA in different countries. Being our lesson 1, we will be covering the subject, nature and purpose of cost and management accounting. To start us off, we'll look at the different definitions of management accounting and other relevant definitions. Before we start, my contacts are charlesomanyo@gmail.com, and my phone number, which you can also reach me through, is also provided on the screen. Now, in nature and purpose of management accounting, there are a number of terms that we'll be defining. We'll be looking at what is management accounting, what is cost accounting, what is cost and cost unit. To start us off with the subject of management accounting, when we talk of management accounting, these are accounts that are prepared to assist management in their decision making or to help management to carry out their functions. Therefore, if a manager is to make any decision, he needs a set of accounts, and the sets of accounts prepared to help manager to carry out his functions, those are what we call management accounting. Number 2, we have what is called cost accounting. Cost accounting is a part of, or it's a branch of management accounting. When we define cost accounting, we can see that cost accounting is a detailed analysis of cost of products, services, activities, or responsibility centers within an organization. The third definition is cost. Cost is the summation of expenditure incurred in order to make a product or to offer a service. When we add up all costs or all expenses incurred in order to make a product or to offer a service, that is what we call a cost. Now, in order to sell a product, we'll need to add some profit markup to the cost that we have incurred to give us the price. That is why it's important to know the cost of a product, because the price at which you sell the product depends on the cost that was incurred to make a product. We also have our last definition, which is cost unit. When we look at cost unit, this is defined as a unit of a product or service to which cost is ascertained or to which cost is determined. In other words, we are looking at the cost of one product or the cost of a service. Now, when we reflect back to the subject of management accounting, we have seen that management accounts are accounts that are prepared to assist management in carrying out their function. In order for a manager to make an informed decision, the manager will need to have good information. Now, for a manager to make informed decision, we have seen that a manager needs good information. Good information has a number of characteristics. The first characteristic being accurate. Information should be accurate. The manager must only receive what is accurate. Number 2, information should be complete. For a manager to make an informed decision, the manager should get all the information that is needed before a decision is made. The third quality management accounts should, or information should be cost effective. What do we mean by cost effective? Information is cost effective if the benefits or the value that we receive from the information is more than the cost of collecting the information. The fourth quality, information should be understandable. Management should receive information that is basically understandable. In this case, it's based on an assumption that a manager has got basic knowledge in the field of accounting, and therefore we should avoid using a lot of jargons. We should be using simple words that are understandable to the manager. Information should also be relevant. Information is relevant if it is significant to the manager, if it can influence the decision that the manager is going to make. We should only provide information that is important to the manager to help him make his decision. We can also see information should be reliable. Information is reliable if it is from the right source. In other words, the producer of the information or the source of the information should be trustworthy. It should be a source that we can depend upon. Information should also be attainable. When we set targets to employees, these are targets that employees can easily achieve. We should not set unrealistic targets. Information should also be time-bound or timely. When we talk of information being time-bound, the management should be in a position to receive all information they need before a decision is made. If information is provided after a decision is made, in that case, we will see or we will say that the information is not timely. And finally, the information that the manager receives should be easy to use. Those are some of the qualities of good information. To help us remember these qualities of good information, we can use an acronym which is ACCURATE. Information should be accurate, where the first letter A stands for accurate, C, complete, the second C, cost effective, understandable, relevant, reliable, attainable, timely, and easy to use. Therefore, information should be accurate. When we delve further in this subject of management accounting, we realize that as a manager has got very many roles in an organization. A manager does a lot, he has a lot of responsibilities within an organization. These many responsibilities of a manager can be summarized into three, that is planning, control, and decision making. When we start with the first function of a manager, which involves planning, planning basically involves setting the goals and objectives, and these goals and objectives should be quantifiable, setting of goals and objectives to be achieved in the future. In that case, we talk of a manager is involved in planning. There are different levels of planning. Senior managers are involved in planning, middle levels management are involved in planning, and also lower level management are involved in planning. Therefore, we should look at the hierarchy or the levels of planning. The first hierarchy of planning is what we call strategic planning. Strategic planning these are plans that are set by the top level management in the organization, for example, the CEO. And these plans are also long-term in nature, and these plans also affects the entire company. Therefore, if plans are set by top management, they are long-term in nature and also affect the whole company, we talk of strategic planning. The second level of planning is tactical planning. In tactical planning, these are plans that are set by the middle level management. The plans are midterm in nature, that is up to 1 year, and also these are plans that affect departments. In that case, we refer to them as being tactical or middle level plans. The last level of planning is what is called operational planning. Under operational planning, these are plans that affect the day-to-day activities of the business, and these are plans also that are set by the lowest level of managers, e.g. supervisors and respective line managers. Therefore, the first role or the first part of a manager, role of a manager or responsibility of a manager is involved in planning. Now, the second role of a manager is involved in control. When we talk of control, control basically looks at comparison of actual results to the plans that were set in order to get the difference. And in this case, the difference is called a variance in management accounting. And after that, to investigate the cause of the difference. Control therefore involves, number one, we look at actual performance. We compare it to the plan that was set to get the difference, which we have said is called a variance, and finally to investigate the cause of the difference. The last role of a manager is decision making. Manager on a day-to-day basis, they're involved in decision making. What is decision making? Decision making is a choice. In everything that we do in life, we normally make a choice. And for you to be a decision maker, there must be a number of options that you are to choose from. If you have a variety of options, you must weigh the information you have, and the information that you have will enable you to make the best decision. Moving forward, we have, why do we study management accounting? What is the importance of management accounting? Previously, we had looked at the role of a manager. Now we are looking at what is the role of management accounting in general. Why do we pursue the field of management accounting? Why do we study this subject of management accounting? There are 8 reasons why we normally study management accounting. Number 1, management accounting helps us to know how to account for costs. We'll be in a position to calculate all the costs that are involved in making a product. And therefore, when we study management accounting, it helps us know how to account for different costs that are incurred in the making of a product or in the offering of a service. Remember, we have defined cost as summation of expenditure incurred in order to make a product or to offer a service. Secondly, management accounting helps an organization to know how to plan and how to make budgets. Budgeting, a budget basically is a quantitative plan of action prepared in advance of the period to which it relates. Therefore, if we study management accounting, it will enable an organization to know how to prepare budgets. Number 3, management accounting helps one to know how to control the operations of an enterprise. Remember, we have said what is control. Control involves comparison of actual results to the plan to get the difference and therefore to investigate the cause of the difference. We can also see that management accounting helps in decision making, and we have said in decision making is a choice between alternatives. Number 5, a study of management accounting will enable you to know how to allocate the scarce resources that we have within the organization. We will know the best place to allocate the scarce resources that we have. Which department should we take the resources and which department should we minimize the resources that are available? Management accounting will also enable an organization to know how to evaluate performance of employees, because we will look at the different ways of measuring performance of employees by looking at the subject of labor. How do we remunerate our employees? How do we reward our employees? What different types of bonuses can we give to our employees? And also, how can we measure our employees' effort? We can also see that management accounting helps in motivation of employees. Normally, in management accounting, we prepare budgets, and budgets help to set targets for employees. Therefore, when employees meet or exceed the target that they set, they'll be rewarded and therefore they'll be motivated. Therefore, by setting targets, there is a benchmark against which performance of employees can be measured, and if they exceed the targets that have been set, they will be rewarded. And therefore, all employees will strive to exceed the target that has been set, and therefore they will be motivated. Finally, management accounting helps in communication of targets of employees. Or management accounting, basically study of management accounting, it will enable an organization to know the appropriate management accounting information system to put in place, which will help to communicate the different targets that an organization sets. And finally, in this introduction to management accounting, we now want to look at differences between financial accounting and management accounting. And in our study, we are going to look at 6 differences between financial accounting and management accounting. Now, the first difference is on the users of information. When we study financial accounting is primarily for external users, and management accounting is for internal users. Who are some of the internal users? That is managers, employees of an organization. Therefore, when we prepare management accounts, we are only targeting internal users. That is people found within the company. While financial accounting are prepared for external users, that is suppliers. Suppliers will need financial accounts. Government will need to know the amount of tax that a business is to pay. Banks will need to know how the business is performing, therefore to know whether the business is creditworthy or not. Therefore, the first difference is on users of information. Financial accounting for external users, management accounting for internal users. The second difference between the financial accounts and management account is on the purpose of the accounts. In the purpose of financial accounting, this is common to most of us because we have in one way or the other prepared a balance sheet, prepared an income statement, and therefore we know the purpose of financial accounting. Purpose of financial accounting number one is to show financial performance of the business by knowing the bottom line. What profit is the business making? That is, what is the income of the business versus the expense of the business to get the profit. The first purpose, therefore, of financial accounting is to show the financial performance. Financial accounting also helps to show financial position through what is commonly known as the balance sheet. We need to know the assets of the business. What are the liabilities of the business? What is the capital invested in the business? The third purpose of financial accounting is to help show the cash position of the business. The fourth purpose is to help know the changes in the cash position of the business. Now, when we come to management accounting, the purpose of is threefold. We had looked at it before. Management accounting helps in number one, planning, number two, control, and number three, decision making. Therefore, when we summarize the purpose, financial accounting is to show financial performance, financial position, changes in financial position and cash position of the business, while management accounting is to help in planning, control, and decision making. When we come to the third difference, which is on the nature of the accounts, we can see that financial accounting is normally quantitative in nature. In other words, we are looking at the figures. Financial accounts does not give you information on quality of products that are being produced. It does not give you information on the technology that is being used in the business. It only provides you with information that is financial or quantitative in nature. On the other hand, when we come to management accounting gives you information that is both quantitative and qualitative, or both financial and non-financial. When we come to the fifth difference between, or the fourth difference between management accounting and financial accounting, we look at the time period. Financial accounting is purely historical. We normally prepare financial statements for the period that is past. We cannot prepare a balance sheet for the coming year. Balance sheet is only for the year that is past or for the current year. We can never prepare a financial statement for the future. Therefore, financial accounts are purely historical in nature. Now, when we come to management accounting, management accounts are both historical and future making. For example, when we prepare budgets, which are management accounts, budgets in this case are prepared, even though they are for the future, they rely on the past information. Therefore, management accounts are both historical and future looking. The fifth difference between financial accounting and management accounting is on the legal requirement. When we come to financial accounting, all limited companies must prepare financial statements. There is a legal requirement that all companies must prepare financial statements. Actually, when you don't prepare financial statements, especially for limited companies, you can be taken to court and charged in a court of law. While management accounting, there is no legal requirement for management accounts. Management accounts are only helping us to manage the business better. Finally, the last difference between financial accounting and management accounting is on the format of the accounts. When we look at the format of the accounts, in financial accounts, there is what we call accounting standards that dictate the format of financial accounts. Mostly we use international financial reporting standards and international accounting standards. And there is what we call International Accounting Standard 1, which prescribes the format of financial statements. On the other hand, when we come to management accounting, in this case, it's upon the management to develop their own format. And therefore, this brings us to the end of our lesson 1, which was on nature and purpose of management accounting. To summarize this subject, we have seen that we have defined what is management accounting. We have said management accounts are accounts that are prepared to help management in their decision making. We have also looked at what is cost accounting. We have seen that cost accounting is a part of management accounting. We have looked at cost, which we have seen is the sum of expenditure incurred in order to make a product or to offer a service. And we have also looked at cost unit. And also we looked at number 2, qualities of good information. We also looked at managerial process of planning, control, and decision making. We also looked at purpose and role of management accounting. And finally, we looked at the differences between financial accounting and management accounting. That brings us to the end of our lesson 1. And when we come to our next lesson will be lesson 2, which is one of the most important topics in the field of management accounting, and that is cost classification. Thank you for your time, and we will meet in our lesson 2. And that brings us to the end of our subject.